How about now?
Oh, there we go. It's popping up.
You got it? Okay, great. I am so sorry. Good morning, everybody. My name is Karina Hernandez, and I'm a CRA lending loan officer for M&T Bank. And CRA just means I specifically concentrate on Community Reinvestment Act portion of it, which technically means just lower income, specific credit guidelines, grants, that type of situation. So not that if you have $500,000, I won't take it, but that is my expertise. First-time home buyers, foreclosure prevention, anything like that, I would be able to maybe guide you to where you could go for assistance. So the topic for today is for first-time home ownership, or if you have not been a homeowner in the last 3 years, you would qualify to be a first-time homeowner. Okay, so the presentation hopefully should take a little less than an hour. I'll try to, kind of go through the sections as quickly as I can. I don't know how you want to handle it, Hannah, if you want to handle questions at the end or as we go along, it's up to you. But if you see anything in the chat for any slides, please let me know. But this presentation I've done quite a bit of time, so we'll play by your sound, okay?
Okay, well, it's whatever you prefer. Would you like me to ask questions when they come up?
Yes, please.
Okay,
yes.
Perfect.
Just so type it in the chat.
Okay, perfect. Yeah, so people can type it in the
chat.
Yeah,
you could just let me know. Correct. Okay. So the path to home ownership is a lengthy one. It will be kind of quickly for some people and maybe not so for others. It is very intricate. There's a lot of steps. It's almost like the Olympics. There's so much there. So what my advice for you today would be, or anyone that you know that is looking into purchasing their first home or entering the market again, would be to do your homework. Please have conversations, arm yourself with knowledge, take notes, and think about it. That's very important. Think about it, okay? So a little bit about M&T. We have been in business for 160 years. We're out of Western New York, so most of our legacy branches are here. We are a full-term lender. We're full size. We do commercial, we do residential, we do everything from a savings account to investment. So if you have any questions in that area, I have worked in those departments, so I might be able to redirect you. Okay, so questions that you might ask yourself: am I ready for home ownership? There's 3 main things that you have to think about when you are looking into home ownership. The first one is credit. What is your credit saying about your profile as a payee, as a person that is paying? Do you pay on time? How many open trade lines do you have? And the ones that are closed, how did you treat those? Did you pay on time? Do you have any collections? Are there any medical collections in there? For the most part, those are forgiven, but they do impact your FICO scoring. So be very careful with that. That is in the very early stages, something you should be checking is your credit. Then it will be your income. Depending on the loan program that you go with, there may be issues with the type of income and how you're earning money. So please ask that question. Most loan investors will require a 2-year solid ongoing income reporting. And then assets. Asset is how much money do you have? So you can have a grant that it will give you $30,000, and there's some out there, but every loan investor will require you to come into the transaction with a minimum investment out of pocket. And that means that is funds that have been sitting in your checking or savings account or retirement account for at least 2 months. Funds that are liquid and that you have access to, and then you can go to the bank and grab anytime. If it's funds that have been recently deposited and you cannot explain, per the IRS rules, we cannot utilize that money. So this is very important. For those of us that save money at home, that doesn't exist. It's not real funds, okay? And we all lenders follow IRS guidelines, okay? Is it true that you need to put 20% down? No, it's not. If you want to save on what your monthly payment looks like and you are a little bit more savvy, then yes, that might be a situation that you might want to enter. But most of us don't have 20% down on, you know, $100,000. We just don't. So there are other options and other tricks that we can use to help you lower your monthly payment. Because if you don't put 20% down, there's something called private mortgage insurance, and that is what adds to your monthly payment on a monthly basis for a certain time. Not forever on most loan programs, but it adds to your payment every single month. As far as a lengthy credit history, if you're new to what it comes to credit and you know you're 19, 20 and you don't have a lot of debt, it's okay. There are loan programs that allow us to create what we call alternative credit, but that is based on you paying, you know, maybe your phone bill or your car insurance for at least 12 months. So be careful with what that looks like for you. If you don't have that under your belt yet, then we really have to work together on how to get you mortgageable. And like I said, the 2 years history, it's very important. It could be a little less if this is steady and solid job, okay? There are certain type of, if you hear noise, I apologize. I am working from home today and my child is in music class. And regarding your mortgage payment, so it could be less than renting. In Monroe County, rent is through the roof right now. And it could be because so many homeowners and landlords have really lost money. So they're sort of trying to recoup. And unfortunately, there's nothing there to stop them from raising the rent. So a lot of renters are turning to home ownership. So you should definitely look into exploring what that looks like. So a first-time home buyer, like I said before, is a person that has not had any home ownership in the last 3 years. And there's 2 ways we verify that. Per your credit report, to make sure that you don't have any loans out there. You know, it shows up in your credit report. And second, that there is no registering of title or deed with the county, and any county in the U.S. and the territories, including Guam. Puerto Rico's included, Hawaii, all of those countries. If you have had home ownership, you're no longer qualified as a first-time home buyer as long as it's within, you know, that 3 days. If you're not a U.S. citizen, you can buy a home. You just have to have paperwork for a residency. So if you know anyone that just came to the U.S. and has any questions regarding, am I eligible to be a homeowner, definitely give me a call, and that's something that we can review, okay? If you have had a previous situation where you were your spouse and you no longer can be in that home because of a domestic situation, you can be considered as a homeowner if that is your situation. It's something, again, we would have to discuss it and figure out how we can get you approved based on that situation, okay? So affordability depends on many different things. The way we calculate it essentially is this. We are going to look at your current gross income. It could be your regular job. It could be self-employment, as long as you have had that job, that ownership of that company for at least 2 years. And the way we verify is we take a look at your business tax returns. So if you were making a mask and you no longer are, but maybe you're switching to making aprons and the business is still running, we have to see reportable income per the tax return for 2 years, okay? If you have SSI, any type of Social Security income, pension, child support, alimony, or if you have Section 8. So this is very important for those of us that have been on Section 8 and can qualify. There is a program that they have, and M&T participates, that we would be able to help you for a certain amount of time, and it would transfer what they pay now for the housing authority. It would transfer to the bank, and they would just, instead of mailing the rental company, they would mail us the check. So there's a lot out there to help people get into home ownership. Okay, the main thing you have to figure out is, can I afford this payment? Okay, it's going to be determined with your current debt. So if you have a $600 car payment, we definitely have to look at that credit report and see if we can refinance to a lower payment. If you have a high credit card debt, You know, the more you owe in a credit card, the higher your required monthly payment's going to be. So we have to look at all those things to see if we are able to move forward with a specific type of area. Because to buy in the city of Rochester, taxes could be $2,000, $3,000. When you look in the suburbs, which many of us would like to live, then the taxes double or triple. And taxes, property taxes, are part of your monthly payment every month for 30 years. So imagine if I pre-approve you for taxes based on purchasing in the city and it's just $3,000, but then you find a home in Greece and the taxes are $6,000. You may no longer qualify for that mortgage. So, you know, when it comes to myself and my clients, we have a very transparent relationship. It is very, very important that you are very honest and clear, because there isn't anything that we're not going to find out. There's extensive research. There's we even do legal research to find out if there's any pending lawsuits, if make sure that you're not that you're able to really truly pay this mortgage for 30 years. Okay, so there's the capacity, the obligations, the debt you have now. It's more important than the debt you're going to acquire in the future. So your mortgage will not override your credit cards and your car payment. Those are there, and that's existing debt that we have to make sure that we're examining and we respect. Okay, assets that we can use retirement funds. We can use gifting. If you have a family member that would be able to give you money without any terms of repayment, we can use any grants, and we're lucky that we live in a state that provides a lot of help. Locally, we have many nonprofit agencies that provide closing cost assistance, which is great. But that's the most important thing, determining where you need help. Do you need help in your credit? Do you need help establishing like a pattern of ongoing income? Or do you need help with assets? How am I going to pay for closing costs? You know, so this is really interesting right here. FHA is the Federal Housing Administration. So having a debt on your home is called mortgage. But who helps you get the mortgage, of course, is me, M&T Bank, but they are loan investors, meaning they are agencies, entities, programs that facilitate the money to us. They give us the money, therefore we can service you and service this loan. The biggest one is FHA, Federal Housing Administration. They're the ones that are more lenient with your credit score, and they're more lenient with how much debt you can have. As you can see in this slide, it says 25 to 50. So yes, they would allow your entire monthly debt to be up to 50% of your income. What does that mean? If you make $3,000 gross a month, they would allow $1,500 between your current debt and your possible monthly payment and mortgage to be that much. It makes me nervous, but if that's what's going to get you into a home and you understand home ownership, I will help you all day long. We also offer VA mortgages for those of you that are veteran or know anyone that has served and is able to qualify. And then we have standard conventional, and we also have renovation loans for those houses that maybe are not that great, but maybe with a little bit more TLC. We would be able to get you in there and get your mortgage approved based on the repairs that you are looking to do. One more loan program that unfortunately you don't see here is called Sunny Ma or Sunny May, which is my favorite. It is a state type of program. It is only available in New York State, and it's for customers or borrowers that are purchasing in New York State and that live and work here. So it is a little bit more detailed with the credit and with their requirements, but it provides the most help in closing costs if you are not able to secure closing costs on your own. Okay. So this is kind of what a monthly payment looks like. So I know that the example was kind of surreal, it's $150,000, but this is what it would look like. So for example, the biggest chunk would be your principal and your interest. When you see your mortgage statement, this amount will never change. As a lender, we can never increase what portion of this you are going to pay. So let's say you're doing a loan for $250,000, and after your required down payment, your amount is going to lower to whatever it's going to be, maybe it's 3% or 5%. Then part of your payment is already $1,017. Then you're going to look at taxes. Yes, those taxes on that property a year get divided by 12, and part of that is your monthly payment. So to that 1,017, you're adding $532. Then you have your homeowner's insurance. Just like your car, you are required to have what is called hazard insurance. Hazard insurance will only cover that, hazardous situations. It will not cover the mortgage. It would only cover if your house gets burnt down, God forbid, or come a tornado and blows it away. It would only pay to rebuild it. It will not pay the bank, okay? It will give you extra money, but it won't give you the amount of money that you would need to really take care of those two. Now, mortgage insurance is the insurance that the loan investor, whether it's FHA, Fannie Mae, or the VA, that they're going to take a policy out on that money. They are giving you $250,000. So they are going to take a policy on that amount that they're lending you. And they're going to say, you know what, Mr. Customer, I'm putting more than you're putting in this transaction. I'm going to take out a policy and then I'm going to make you pay for it. In this case, a loan that is $250,000 is going to cost you $199. Yeah, that's a lot. So I would say in this case, this customer did not have the best FICO scoring and credit profile. So for those of you that know a little bit about how insurance works, everyone has an insurance score. So when you call your Geico or Progressive and you're wondering how come each one of them is giving you maybe a little bit of different quote, definitely dig in, because in New York State, all insurance companies are mandated to provide the very basic. If it truly varies, it's because they're doing add-ons, okay? So it's similar to the mortgage insurance. So I would say do your research. And now you're not able to shop for mortgage insurance, but I would shop for you to get you the cheaper one, okay? So yes, there is a lot involved in your monthly payment. Year after year, your monthly payment will be different. You will not have the same mortgage payment from the first payment to the last payment. It can't, because taxes change, homeowners insurance change, and your mortgage insurance might change. The only thing that doesn't change is this, the principal and interest that the lender, us, the bank, quoted you, okay? Any questions on that one? I know that was a handful. That was a mouthful. Okay, so what is a good credit score? Yes, I've seen credit ranges as low as 300, and that could be because maybe you opened credit and the only thing that you had left there was maybe a student loan that you decide not to pay off. So it could be that there is just limited amount of funding in your credit profile. Maybe you had a credit card and you opened it for $250, you maxed it out, and you don't have anything else. That is what would categorize someone to have a FICO that low, because they don't have a lot of variety, and what they did have, they did not use it wisely, okay? Now, there are loan programs that would allow you to go into a mortgage with what we consider low. Anything under 620 is fairly low. I would be very careful to enter in any type of transaction with anything, with car insurance, with purchasing a car, with going to Walmart, opening a credit card, because the interest is going to be high. You're not going to be rewarded. And if anything, you're going to be penalized on that interest, okay? But there are ways that we can help you work on your credit so you can improve it and you can have a better option for you. Any questions on the credit piece?
We do have a question in the chat. It says, clarity, what you said about homeowner insurance. If I have paid, for example, 15 years of payments and I lose my house to a fire, the insurance only pays for a rebuild?
Correct. So this is what you have to do. This is very important. Like I said, across the board, in New York State, and this we're lucky to live in New York State, by the way, when it comes to this. There's a certain amount of minimums every single hazard insurance has to provide. Having said that, there are add-ons. What you want to do is you want to make sure you're reviewing your policy and you're double checking. It's kind of like gap insurance. You want to make sure that you have that little the little extra, because let me give an example. A house in the city, maybe you only pay $60,000 for. So when you look at the insurance, you're trying to figure out, well, I don't have a lot and my credit's not that great. So I'm only going to get coverage for $200,000. Okay, so $200,000 is barely going to cost the build, because you are rebuilding everything from scratch. You're going to have to pay to tear it down. There's things inside of that home that you're going to have to acquire. $200,000 coverage for just a $60,000 or $50,000 home in the city is not going to cut it. So it pays to pay a little more on a little bit more coverage. So it may look like $350,000 when you look at what the coverage is, because that lender has to be paid. And yes, you will have to, even if your house burns down and there's nothing there, you have to go to the bank and make that mortgage payment. You do. It doesn't freeze. It's just like your car. If you get in a car accident and you're waiting for the insurance to send you the check, honey, you have to make that payment, because they are financing an amount. They don't care that your car is totaled. They don't care that you're waiting for the insurance. What they care of, we gave you money, you're paying me back, period. That is the difference between credit and understanding your responsibility. You're responsible to pay for something that you borrow. You're going to pay it back of your situation. Whether you're driving the car or not, whether you're living in the house or not, you have a debt you need to pay it while you sort out whatever's going on. It sounds extremely unfair and it's extremely crazy, but this country is not, America's not been built on Dunkin', on coffee, it's built on credit. Everything in this country is based on credit. The sooner you understand that, the sooner you'll be able to make that work for you, okay? So yes, if you've had a house for 15 years and you're paying the homeowner's insurance and you haven't reviewed that policy with your agent, today you need to get off the call as soon as you're done, and you need to be making a phone call. You need to find out if this happens, what does it look for me? Luckily, if you have been making payments for 15 years, your principal is not going to be as high. But there's things that you can do to review your mortgage with your lender and ask questions. Hey, listen, what is my loan to value? Meaning the remaining amount you have owed versus the worth of your home. And right now, unfortunately, the homes are worth a lot more. So for anyone that is currently a homeowner, this is the best time, the best time to do a refinance, okay? Any other questions on that one? Okay. All right, so there is a variety of how they calculate your FICO scoring, all right? Between the amount that you owe, and let's start with that one. Let's say you have a credit card and your limit is $1,000. That's, Walmart was very generous with you and they gave you, hey, go ahead, go shopping, $1,000. And you go there every month and you go swipe happy. That wrist, you're having fun with that wrist and you're swiping, right? And every month that balance keeps going up, right? There's a problem, because the more you use that is available to you, then you will be penalized. You are using too much. So if you go over 30 to 45, or if your available credit, your FICO is going to tank. Please understand this. Your FICO, and you're wondering, well, that's not fair. Well, it's not about fair or not. It's about how companies make money. And this is enticing you to be responsible with your credit. Just because it's there doesn't mean you have to eat it. Just because it's there doesn't mean you have to use it. Just because it's there doesn't mean you have to take it. This is with everything in life. Just because it's available to you doesn't mean it's yours, okay? Payment history is probably the most important one. It gives them an idea of what happened. How often were you late? And even if it's not your fault, please understand that every lender has a cutoff date to report. All right, I'll give you an example. M&T Bank, your payment may be due on the 10th. We will give you an additional 30 days to make the payment. Yes, you will be late in our records. Yes, you will get a late fee, but we will not report you until 30 full days of not receiving the payment. Not every lender is like this. Please understand. If you enter into business with a lender, and by you having a credit card, a car, or anything like that, you are in business with them, okay? You are their patron. I would strongly advise you to get an understanding what that looks like, okay? So what you want to do is say, look, if I'm late, some companies, as soon as a week later or a day later, you are reporting. Please understand, it's not about being fair, it's about how they do business, okay? The credit limit kind of goes hand in hand with the amount that you owe. Do not surpass how much you're being given. And this will happen to you if you go swipe happy and then you have late fees and then you have interest. It doesn't matter that you did not actually swipe over that $1,000 limit. The interest that you owe will put you over the limit and therefore automatically ding your credit score, okay? New credit. This sounds like, this is the one I don't agree with. New credit will tank your FICO. And it will take about 6 months to recuperate, okay? So basically, you already established credit. It looks great. You have a diversity. You have a couple credit cards, a car loan, maybe a mortgage, and now you acquire new credit. Yes, it will go down the first 6 months. And then it's going to skyrocket because you have paid on time and you have proven what type of borrower you are. Use it to your advantage. If you know this is going to happen to you, make sure your other credit lines are healthy, are paid on time, and you're not overusing. So if you're going to acquire new credit coming up, make sure everything else is in control so it doesn't go haywire, okay? And it's all a math game. So there are different costs associated with purchasing a home, okay? Let me make sure I'm right. So earnest money deposit. What does that mean? This is kind of part of the process of owning a home. And you come to me, I check your credit, I give you a letter. And the letter says that you can go house shopping. You can either get a real estate agent that can guide you through the process, and there are many, 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 many agents, or you can get it, if you have a house in mind, maybe, where you live currently, or maybe, a friend that's going to sell you the house directly and you want to bypass a agent because you don't really need to find a home. You already have one in mind. What you will need is a real estate attorney, not a divorce attorney that can do real estate. You need a real estate attorney, okay? Because that is their bread and butter and they know what to look for. So what they would ask is called a good faith deposit, AKA earnest money. That just means you're putting a certain amount. It's like you put in the house on hold. You put in the house on transaction. Any amount that any check that you write, any portion goes towards closing cost, okay? Should you choose to have a home inspection, you will be able to check if there's anything hazardous in the house. It is not required by the loan investor or by the bank, but it may be required by the grant agency if you are applying for a grant. So we specialize in working with grant agencies, but we're not going to do the job for them because that's for them to do. Please have the conversation with the home counselor to find out what are the strings attached with utilizing a grant, because there are a few, okay? Prepaid fees technically just means the application of me starting the process, the appraisal, which is finding value in the property, and the credit report. Do we have a question?
Yes, someone said, I hear myself echoing. What is the effect of closing new credit cards? Example, 3 that are 3 months, 4 months, 5 months, respectively. Will I get a ding for dropping, or will the short credit histories being dropped help in the long run?
Good question. So I'll give you an example. Without saying name, there are lenders out there that have like a 6-month short-term loan. These are great if you need the money. These are not great if you're building credit. This is a nightmare. This is a complete nightmare. You are paying, it takes time. It's kind of like like climbing, you're climbing a mountain. So it takes time to get a groove and to get there. So I'm only going to give you 6 months to build your credit. And then when you're done with the last payment, I'm going to drop you. What? No, it drives me nuts when I see this, when people say, well, I went to so-and-so and I took a 6-month loan and it's helping my credit. Yeah, what do you think is going to happen when you close that? There's nothing to report. They can no longer report what a great person you are, paying on time. They can't report that anymore because you're done paying. Please don't fall into that trap. Now, if you went to Victoria's Secret and you got 50% off for opening a credit card and you just wanted to do it for the credit card, you already got a ding for opening new credit and making that payment. If you're going to close it, then I would say within 6 months, that will be the time to do it because it's not doing you any favors. Now, if you're really going to open your credit for a discount, let you use the credit. Don't let the credit use you. Please don't open credit cards for a discount because just in the fees alone of interest that they're charging you, you wasted that discount. It is just not a good investment of your money and of your credit. Don't fall into that, okay? So in short, it really depends. What is it that you opened? Is it a credit card? Is it a short-term loan? What is it doing for you? Why did you open it? If you just open it for a discount, that will be a personal situation that you decided. If you did it because you really needed the money, then you know what? You're using them, they're not using you. But understand that as soon as that trade is closed, it will hurt your credit report, okay? So down payment. So when it comes to closing costs, there's 3 buckets. Down payment, which is what you have to bring to the transaction, typically is between 3 and 5%. And if you could put 20% down, then God bless you, you have money to spend. Then second, it will be homeowners insurance and your taxes. Those are part of things that have to be paid out of pocket by closing. So when you show up to the attorney's office, he calls you and say, hey, Mr. Customer, you have to bring another $6,000 to closing to pay for whatever. Typically, your taxes and your homeowner's insurance will be included there. And then lastly, what you see here, title, lender fees, insurance, filing, attorneys, combination of different things. Typically, that's between 3 to 5% of the loan size, okay? So if I give you an example of a $100,000 home in the city of Rochester, using maybe FHA, you're looking roughly at about $11,000, $12,000, okay? And again, it varies depending on what certain things are going to cost you. So seller concessions. I'm not going to spend too much time in this because if you are able to get a seller of a home to give you a credit for buying that home, you're lucky because that's not happening. The market is very competitive, and what sellers are looking for the most part, is the highest bid. So if they're looking for the highest bid, they're not going to offer you a credit. It's kind of like giving you a coupon or a rebate. You're not going to get it. So talk to your realtor if you have one, but the chances of you getting a seller concession are very low right now. Okay. So grants and gifts, like I said, locally, there's a lot of nonprofits that are there to offer you assistance in counseling. Please use them. There is the Housing Council, Neighborhood Works, there is Market View Heights, CCCS of Rochester, the Greater Rochester Housing Partnership. There are so many locally, and they're great. The only thing I will cause anyone against, I will caution is to spend money to get help. There is no reason why you should spend any money anywhere. I'm here to save you money. If you call me and say, hey, Karina, so-and-so is telling me I need to pay, hold up, wait a minute. Let's talk about this, okay? So especially if it's a nonprofit, you have to really understand what they're looking, what is it that they're trying to provide for you. Again, remember, there's always a basic layer of help, and then there are add-ons, all right? There are, depending on where you work, there are employers like Rochester General, Strong, the City of Rochester, the Teachers Associations that offer assistance for their employees. Please, please, please find out, okay? There's also the Home Buyer Dream Program, which is from the Federal Home Bank of New York, and M&T is a participating lender, all right? It's a program that opens up for a certain amount of time for qualified buyers. Again, that's the key thing. When you're applying for grants, we have to make sure that you qualify. It's not for everyone. If it sounds too good to be true, it could be for some people, okay? And then M&T, depending on where you're buying, we have a grant in certain areas that we are able to facilitate $5,000, okay? Again, if it sounds like, yeah, there's money to take, it's not a low-hanging fruit. It may not be for you. So please do inquire about your specific scenario, because it may be that you heard from your neighbor or from your coworker or from your cousin, but you know what? Their situation is completely different. In home ownership, no files are ever similar. It sounds like they might be similar, but it's not the case, okay? These are some of the, again, touching base on what I said about where you could go. City and state, nonprofits, employers, even your lender, like the Sunny Mae loan that I just talked about, they may be able to help you with down payment assistance. But please understand, if any of these grants or any of these aid falls through, you are solely responsible for closing costs. Nobody else is. That $11,000, $12,000, if the city of Rochester did not provide that grant for you, or for whatever reason you no longer qualify because you got a fat raise, and they said, well, wait a minute, you no longer qualify, guess what? They have to drop you, and you have to find a way to pay for that additional funding that they are no longer going to cover. So please understand, I will help you with grants all day long, but you are responsible to make sure that you have all those funds, okay? So quickly, the role of an agent is really to help you find a home, number one, but also to help to understand your situation and help you facilitate what does it look like for you to get into this home. It's not just for them to get a commission check. That ain't gonna work, okay? They work for you, and they only get paid when you buy the house, okay? They're not doing you a favor. They are working for you, and they will be paid once you close on this deal. So it's in their best interest to understand what your situation is, what grants you're using, and what lender you're using, and why you're using that lender, okay? Any questions in that one? Okay, so we have to define your goals. You have to define, if you tell me, oh, Karina, I kind of want to buy in the city, but if I find a house in Webster, if I find a house in Gates, I'm fine. That's not gonna work, okay? You have to define your priorities. What does it look like for you? Because there's a tax bracket in the city, and when we talk about, this is the city of Rochester, when we talk about the west side versus the east side, everything is more expensive on the east side. Therefore, you can't tell me that you're not sure where you want to buy. That means that you're not serious about home ownership. Part of knowing where you want to live is knowing what your budget is and kind of exploring the market. You don't have to be pre-approved to have an idea where you want to live or the type of house that you want. Maybe you really thought you wanted a 2-level and a garage, but doing your research, guess what? It may be a problem because a 2-car garage is going to cost you more with your homeowner's insurance, because it's more to insure if it burns down versus a house that doesn't have a garage. Those are the little things that you have to find out, and really the process. You're going to enter into a legally binding contract with the owner of that house. That's why it's important to have a good relationship with your realtor and with the attorney. Sometimes the realtor will suggest an attorney and you'll just go with it. There is no one to blame here if you don't get a good relationship with the attorney. You know today, because I'm telling you, that you will need an attorney. Please familiarize yourself with what that looks like, because you will have to pay that attorney out of pocket. That is part of closing costs. This entire process from offering a contract and getting an accepted contract to applying could be 60 days. So relax. Do not tell your current landlord that you are moving until you have the conversation with me, okay? Because there may be things that happen and it may be delayed, and we don't want you to be homeless, okay? There a walkthrough and into the final call. You're going to say, hey, Mr. Customer, we're good to go. Everything, the bank is good. Every attorney is good. Do a final walkthrough. Don't ever skip this walkthrough. Sometimes you would have seen this house only once or twice. So a walkthrough is you will take a mental note and say, oh, was this a refrigerator that was here? I have known of sellers that have replaced refrigerators. There was a nice one when the people walked through, and then there was a crappy one. Take a mental note. And if you want to take a picture, you can. I mean, if this is the house, you can't go randomly taking pictures to homes that you go to. You can't do that. But if this is the home that you're entering into contract and you want to make sure you're okay, you can ask your agent to go see the house as you see fit. Of course, not 10 times where people are living there, but be reasonable. You want to be sure that this is the home that you want to buy. Tons of programs. So this is getting specific in programs that we offer. M&T has a program called Get Started. The down payment is very low. We do offer closing cost assistance, and we do have a bi-weekly type of mortgage payment. And all that does is helps you pay for your loan sooner. Instead of the average 30 years, you could pay it back in about 26 years. We offer VA loans, all of them. We offer all FHA mortgages. And Fannie and Freddie are conventional loans. So whenever you hear, oh, are you going conventional? We offer both. But again, there's specific credit guidelines with them. And then, of course, my favorite, the Sonny Mae state mortgages. They are amazing. They offer so much, as you can see. Their mortgages are fixed. They have a down payment assistance loan. They allow seller contributions. You know, if you have a parent that is gifting you all of the money, they allow that. It's great. Okay. So short sales, we're not going to talk about because short sales are not short. They're actually very long. They could take a year. And you're mostly dealing with the attorneys. You're not really dealing with the bank. We can give you a mortgage for it, but they're a nightmare. So be careful. Foreclosures is the same situation. Don't call me to find a foreclosure home. They're a nightmare because as soon as you miss a payment, this is public record. It doesn't mean that that homeowner is in foreclosure. Please understand that. That's not what it means. So be careful with approaching a homeowner and going there and knocking on the door and say, I want to buy your house. You may be offending that person because it could just be that maybe they were sick and somehow they missed a couple payments. It doesn't mean that they're actually foreclosing on their home. Okay. Distressed properties. All this means is that there are loans specifically for houses that need TLC. And you can do a rehab, and you don't have to have, you know, a salary of, you know, $300,000 to do this. You can be, a daily hardworking person, and you can do a rehab loan, depending on what you're looking to do. Okay. So getting prepared. This is huge. This is very important. There are reasons why we request this information. Okay. We are going to need your pay stubs. Your pay stubs say a lot of things about how you earn your money. We can use Social Security. And then when I mean Social Security, your award letter. Every single person gets an award letter. Your pension statement, not your monthly payment that says how much you get, but your yearly award. And then your pay stub, everything for 30 days. All right. Child support and divorce decree. We will need the actual order, and we will need where you receive these funds. Now, W-2s for all jobs, let us know, you know, if you've had a job in 2019 and it looks like you have about 10 different W-2s, it's not looking very good for you. So I would say have the conversation. That's what we ask for you up front. If you have moved several times, it doesn't look good for you either. So please, you have to be very transparent because we will find out. This is public information. We will find out where you lived and how many times you moved. Don't ask me how, but it's the thing that happens, okay? So bank statements, just let us know, you know, what are these deposits? Have you been making large deposits into this account? Could we use them? This is very important. And, you know, any type of retirement funds, it helps you look better. It's kind of like makeup. Maybe you don't need it, but it just makes you look good in an application, okay? So the next step, if you are interested or if you're looking to get approved, is to talk about start the process. Yes, I'm thinking about it, but I don't know where I'm at. I really need to figure out the CIA of me. What is my CIA? And it's not CIA of the US, CIA of mortgage. What is my credit? What is my income? What are my assets? And what can you help me with? Okay. Any other questions?
Nothing in the chat right now, but we'll give it a minute.
Sure, sure. I know it's a lot there. It's if your brain is like exploding, it's probably because it's registering. If you really totally bypassed you, most people that are really engaged in what is looking, they have questions after question. They're like, it's like a moment, like, what did I just get myself into? It's nerve wracking. It's really a serious and it's the most serious debt you will enter, and you should be cautious. Also, I want to mention something with grants. There is a limit of required for you to live in those properties. So ask those questions. What does it look like if I have to move out of state? What does it look like if, you know what, all of a sudden I outgrew this house. I have people that are living with me now that I can no longer stay in this home. What does it look like for me? So all of those are big questions that you should ask. Nothing that it can't be undone, but you definitely should inquire not only with the lender, but also with the real estate agent and the grant agency that is giving you those funds. Okay.
Like, quick question, because I'm sure more people will have more personal questions to ask. Is it okay if they call you directly, or should they be reaching out to?
Absolutely.
Okay.
Absolutely. This is something I do. I would say in average, most of my customers, it take them about seven to 18 months to be ready. And it could be because maybe when you came to me, you only have maybe $90 in your bank account. I can't even pre-approve you with $90 unless we have gift, your credit might be perfect and your income solid, same job for 15 years, but you just don't have the money. You know what? We got to get to work, because you can't put an offer on a house if you don't have secure funds for closing costs. So we need to apply for those grants before you even go house shopping.
And someone just asked, how do you apply for a low income loan?
How did you apply? Can you elaborate on that? How did you apply for a low income loan? What does that mean? A loan or grant?
Said loan, so we'll wait for them to explain a little bit more.
On my end, we don't have we don't call it low income. We call it income cap. Okay. So there's a certain amount of income that you cannot exceed. Let's say you're interested in the Sunny May or Sunny Ma. They have, depending on the area where you're buying, they have a restriction over how much income you could make because of the benefits of the program, because of their low interest, because of their down payment assistance. And really, they don't have a limit to how many grants you can use. And that's why they're my favorite, because you can have grants from your employer, from maybe the city of Rochester, maybe one that M&T is giving you. We do have what we call a census tract based on where the property is located, that we can provide $2,000 to you to help with closing costs as well.
So they did say, how would someone on Section 8 go about purchasing a house?
Yep, you start there, Section 8. So you want to start with your counselor or with your case manager and say, you know what does this look like for me? Because it's not, I believe there's 3 different programs that they have throughout the US. Okay. So it would have to be a case that can transfer. And this is not for us to verify. This is specifically Section 8 that would tell you. This is this portion that they're automatically mailing to your housing complex. They would instead mail to us. So there's a specific letter that they would give you when we get qualified, and we send, and there are only specific loan programs that allow this. And unfortunately, not every lender allows this, but we do it. And I've done a few so far this year, and they're amazing. It's pretty cool. And it's only for a certain amount of time. So it's not indefinitely. Okay. So some of them are 8, 10, 15 years. So you have to figure out how much is it for you in your case.
Thank you. We'll see if anybody else has any more questions. It doesn't seem like it, but like I said, I'm sure people, Yeah, I'm sure people will have more personal questions and they will reach out to you. So I just
Of
wanted to
course,
thank you
of course.
so much.
Sure. Thank you. Thank you. Good luck to everyone. Please share the information you learned today. It's very important for people to get educated on in the process of home ownership. And like I said, I love doing this. So any questions that you have, you're not bothering me. I would love to assist in any way I can. So thanks, Anna. I appreciate it.
Thank you very much. Have a good day,
Thank you.
everyone.
Thank you, guys. Take care. Bye-bye.